Let's learn about net of tax. Let's review a little bit about your multiple step income statement. We have our key performance measures. Now, let's draw a line under income from continuing operations. And what you see there is income tax expense as a line item. That income tax expense is associated with everything above it. So it's a matching between those items in that income tax expense. Anything below that line has to be shown net of tax. So discontinued operations and OCI have to be shown net of tax. Earnings per share is excluded from line items on the statements. So let's look at discontinued operations. The net of tax amount is in the parentheses. The amount that's towards its side is after the tax effects. We need to learn how to do this. OCI also is net of tax. Everything below there, the tax is associated with each line item. How do we compute net of tax? Well, let's start with the overall gain. In our example, we're going to say we have a gain of $50,000. Now, there's a tax that goes with that. The tax rate is 40%. So if we're going to have a gain of $50,000, the income tax associated with that is going to be an income tax expense. So let's solve for that first. Simply, we're taking the $50,000 of the gain, multiplying it by the 40%. That ends up being $20,000. To show what is net of tax, we can show that the overall gain was $50,000. You subtract out the additional income tax expense associated with that gain of $20,000. That leaves us with a gain of net of tax of $30,000. So with that official gain that originally was $50,000, we net $30,000 of it. Let's take a look at our discontinued operations over here, specifically the income from the operations piece. Notice that we have the $12,500, and that is net of tax of $3,500. Let's see how they got this number. So how did they get this amount? $12,500 was the net amount. Well, what was the original income from discontinued operations? Let's take a look. Our income tax expense was already shown, the net of tax amount was shown, so therefore the overall amount must have been $16,000. It has shown net of tax because that provides better information for our users, our external users, and the net amount is there. So like we said over here, that's a gain. Let's look at how to do a loss. Now remember, when you have a loss, you have, it reduces your net income. So 40% tax rate still exists for this particular item. The income tax benefit of the loss is, here's a shortcut, 10,000 times 0.60. That's net of tax in terms of the loss. Doing it the longhand way, as we did with the gain, you have loss, subtract out the income tax benefit, 40% times $10,000. And let's remember to put parentheses around our loss. The loss net amount ends up being the $10,000 loss. You add back the income tax benefit, and the end up net of loss is $6,000. What do we do net of tax on the income statement? Remember, anything below continued operations, discontinued operations, and all OCI items. This is called intra-period tax allocation. That's the official word. But basically, it's associating the income tax expense with everything shown above it, and everything shown below has to be done net of tax. In effect, this information provides better information for our investors and creditors because the income tax expense is shown as what's likely to continue. The items are being shown below, and they're all net of tax. You got to do something with that. We don't want to have income tax expense for every single line there. So it's a way of condensing information, but still showing the tax effects.